The history of the meltdown. Got this from a blog. I actually kind of became friends with the guy back when he was first doing it. He got so stressed out during the financial crisis, it seems like, that he quit the blog and he hasn't posted on there in 4 or 5 years. I would like to put a link to this on this video or down in the comments section, so look for it when we're done discussing it here. But I think a lot of you will find this very interesting. If you haven't seen this already, this isn't the original copy, because towards the end I started keeping up to date with it and helping him add to it as far as events that were taking place. There's some events in here that I had personally emailed him with the links to include. That way this thing had everything in it. Anyways, it's a history of the meltdown, kind of a timeline, and it's extremely accurate with all of the citations necessary. But let's review it. Let's do a little history lesson. It's going to be fun. Join me, would you? The history of the meltdown, 2007. It's March 28th. The problems in the subprime market seem likely to be contained. That's Ben Bernanke, Federal Reserve Chairman, on March 28th, 2007. No one could have been more wrong. This unfortunate collection of words by Bernanke has been quoted over and over again as proof that the Fed did not grasp the gravity of the subprime debacle. He made this comment as part of his testimony he gave to the Joint Economic Committee of Congress, and it came back to haunt him when the financial sector began to collapse. And it should. That guy's supposed to be the expert, supposedly. Let's avoid commentary. I'll try to just read these because it's so good. Okay. July 31st, 2007. 2 Bear Stearns funds that invested in mortgage securities filed bankruptcy. I remember that vividly. Okay. August 9th, 2007. French bank BNP Paribas freezes 3 funds with U.S. mortgage exposure, helping to spark a worldwide credit squeeze. October 11th, 2007. The Dow hits an all-time high of 14,279 during the afternoon, and it was all downhill from here. October 30th, 2007. Amid mounting losses, Merrill Lynch CEO Stan O'Neill resigns. November 4th, 2007. Citigroup CEO Charles Prince steps down. Zoom out for you guys a little bit. December 2007, the U.S. recession officially begins, but won't be announced until December 1st, 2008. There are links for all of these, which will be included in the main link for it. 2008, January 11th, 2008, Countrywide Financial insolvent. Bank of America agrees to buy them, saving them from bankruptcy. February 1st, 2008, ExxonMobil posts the largest annual profit by a U.S. company in history, $40.6 billion, a record that will not be broken for decades. February 12th, 2008, General Motors announces losses of $38.7 billion last year, largest annual loss in automotive history, and offers buyouts to 74,000 hourly workers. March 12th, 2008, we don't see any pressure on our liquidity, let alone a liquidity crisis. That was Alan Schwartz, former CEO of Bear Stearns, March 12, 2008. Schwartz was fending off speculation that the investment banking giant was in cash crunch when he made this statement, trying to reassure investors that Bear Stearns was doing okay. I believe somewhere in here Jim Cramer said Bear Stearns was a good buy and they weren't going to go down. Perhaps. I don't know where his video is, but let's find it here. Bear Stearns dies. JP Morgan Chase snatches them up at a fire sale price. The government coughs up $30 billion to sweeten the deal. Gold and silver are hitting new highs every day. We have more capital than we need, so we can okay, this is March 16th, 2008. This is a quotation. We have more capital than we need, so we can say to the market that we don't need more injections. We can confirm that we have tackled the problem. John Thain, former CEO, Merrill Lynch, March 16th, 2008. Merrill Lynch would become insolvent by September 15th. July 11th, 2008. IndyMac Bank dies, becomes the 3rd largest bank failure in U.S. history. There's a video attached to it which is angry customers trying to get their money. July 11th, 2008. Oil prices reach an all-time high, $147 a barrel. Gas at the pump over $5 a gallon. July 15th, 2008. I don't think the government ought to be involved in bailing out companies. George Bush, President of the United States. He made this statement at a press conference where he reiterated that he felt the economy was basically sound. Okay. By the end of the year, the government would be involved in the bailouts of AIG, Fannie, Freddie, Citigroup, GM, Chrysler, Ford, and every one of the 10 largest banks through TARP and the Fed loan window. So, Bush obviously believed in bailing out companies. July 16th, 2008. I think the system is basically sound. I truly do, Bush said. And I understand there's a lot of nervousness. But the economy's growing, productivity is high, trade is up, people are working. It's not as good as we'd like, but to the extent that we find weakness, we'll move. That's my George Bush impersonation. George Bush, President of the United States. With 3 more financial outlets collapsing under the economic meltdown last week, queues of angry people outside banks with no access to their money. Inflation at its highest rate in 27 years, and scores of economists predicting recession may tip into a full-blown depression, President Bush reacted by declaring that the economy is still fundamentally sound. July 24th, 2008. Ford Motor Company posts the worst quarterly performance in its history, losing $8.67 billion, and plans to quickly change focus from trucks to small cars. September 5th, 2008. Silver State Bank is closed in the 11th bank failure of the year. September 7th, 2008. Fannie Mae and Freddie Mac on the ropes. The government seizes them at a cost of $200 billion. September 11th, 2008. Sudden $550 billion drawdown in money market deposits. This was huge. Remember this giant money market vacuum? Okay, let's read this again. September 11th, 2008. There was a sudden $550 billion drawdown in the money market deposits. The unexpected event was revealed to Congress in secret on September 15th, 2008, and not made public until February 6th, 2009. This may have been the trigger event for the U.S. banking crisis. And there's an article called What You Weren't Told on 9/11/2008. September 15th, 2008. 158-year-old Lehman Brothers files bankruptcy. At $630 billion, it's the largest bankruptcy in U.S. history. This sparks a chain reaction that sends credit markets into disarray. Merrill Lynch is in trouble. Bank of America agrees to buy them out for $50 billion. September 16th, 2008. The world's largest insurer, AIG, is insolvent. Government takes control of them for $85 billion. AIG is replaced by Kraft Foods as a component of the Dow Jones Industrial Index. Okay, the nation's first money market fund collapses when it breaks the buck and is frozen. 2 days later, Paulson and Bernanke extend federal insurance to some $3.4 trillion in money market funds. September 17th, 2008, the stock market down 9% in 2 days. Gold posts its biggest 24-hour gain percentage and actual money amount in history. Russian stock market is closed for 2 days after it dives 25%. Secretary of the Treasury Paulson proposes the biggest financial bailout in U.S. history. It grows from an estimated $300 billion to $700 billion in 3 days. The SEC temporarily bans short sales of 800 stocks from today through October 2nd. Secretary of Treasury Paulson asks for unprecedented and unrestricted authority to use taxpayer money to bail out any financial entity. September 21st, 2008. Eager to be eligible for the Fed's bank-only billion-dollar handouts, Goldman Sachs and Morgan Stanley suddenly transform themselves into deposit-taking banks. September 25th, 2008. Washington Mutual, the U.S. largest savings and loan, becomes the largest bank failure in history. It is seized by the Feds and sold off to J.P. Morgan Chase. September 27th, 2008. Legislative martial law is declared by the Speaker of the House in an effort to ram through the $700 billion bailout bill. This attempt fails. Good. September 29th, 2008. Wachovia, the nation's fourth largest bank, is in trouble. The FDIC brokers its sale to Citigroup. Eventually, Wells Fargo beats out Citigroup. The Dow Jones Industrial Average suffers its biggest point drop in history. The VIX, or the Fear Index, sets a new all-time high of 48.40. October 3rd, 2008. The House passes the $700 billion bankster bailout bill. President immediately signs it into law. The executive branch now has unrestricted control over who gets what for the bailouts. October 6th, 2008, the VIX Fear Index sets another new all-time high at 58.24. The Dow drops to 9,955. First close below 10,000 since 2004. I won a bet that day because I bet a cousin about 6 months earlier that the Dow would be below 10,000 before the year was up. It was before 2009 hit. Okay, October 7th, 2008. Russia, Brazil, and Peru suspend trading when their stock markets fall nearly 20% at open. Prime Minister of Iceland warns of impeding bankruptcy of his country. Maybe it was impending, they should have put. October 8, 2008. The Federal Reserve, European Central Bank, and 4 other central banks lowered worldwide interest rates in an unprecedented coordinated effort to ease the economic effects of the worst financial crisis since the Great Depression. October 9th, 2008. Iceland suspends trading on its stock market for the rest of the week. Its 3 largest banks have failed. The European Central Bank announces unlimited amount of cash available to banks. October 10th, 2008. The Dow had its worst week in both point and percentage terms and is down 40.3% since reaching a new record high close of 14,164.53 on October 9th, 2007. In the last 8 trading days alone, the blue chip index has lost a staggering 22.1% of its value. The past weeks, October 6th through 10th, 18% decline. And Friday's 1,018.77 point swing from low to high were the biggest since the Dow was created in 1896. Britain was just 3 hours away from going bust today after a secret run on the banks. This wasn't revealed until January 24th, 2009, by one of British Prime Minister Gordon Brown's ministers. There's a link to that to prove that that is true. Let's see, October 11th, 2008. Top 9 U.S. banks nationalized. Emergency meeting called by Secretary Treasury Paulson. He tells the CEOs of the nation's top 9 banks, from Bank of America to Wells Fargo, that the financial system is in trouble, and he is nationalizing them. Each CEO receives a single sheet of paper saying they agree to receive a total of $125 billion in exchange for shares. The Dow chalks up its biggest ever one-day point gain to close over 9,000. After last week's devastating losses, the U.S. Fed authorizes unlimited dollars for distribution by European central banks. The flood of new dollars is estimated at $2.3 trillion worldwide. I'm going to pause for a moment. At this time, at current gold prices, there was only $4.3 trillion worth of gold ever mined since the beginning of time, which means they gave away over half of all of the gold ever mined since the beginning of time in dollar value away in a single day. Interesting. October 15th, 2008. Monday's huge Dow gain is countered by today's huge loss of 733 points. October 16th, 2008. I was hunting pheasant when this was all going on, receiving texts from a buddy telling me when these point drops were taking place. It was pretty interesting. Okay, October 16th, 2008. Oil prices fall below $70 a barrel, less than half the July peak. November 6th, 2008. U.S. stocks tumble in market's worst two-day slump since 1987. Bloomberg.com. S&P 500 down 10%. November 7th, 2008. Unemployment jumps to a 14-year high of 6.5%. We're still above that right now. November 19th, 2008. The Dow dives under 8,000, the lowest close since March of 2003. Ooh, and it's going to get lower. November 23rd, 2008. Citigroup, once the nation's largest and mightiest financial institution, has been brought to its knees by more than $65 billion in losses. Citigroup stock has plummeted to its lowest price in more than a decade, closing Friday at $3.77. At the price, the company is worth just $20.5 billion, down from $244 billion in two years ago. Waves of layoffs have accompanied that slide, with about 75,000 jobs already gone or set to disappear from a workforce that numbered about 375,000 a year ago. November 26, 2008. With the government bailout of Citigroup, U.S. bailouts now total almost 35% of gross domestic product. First it was the banks, then Fannie Mae and Freddie Mac, followed by AIG, Citigroup, now possibly auto companies, the home builders, and the legacy airlines. Increasingly, the American government is becoming corporate America's largest investor. The U.S. government now owns or operates 35% of the entire economy's production or gross domestic product. November 1st, 2008. Announcement. The U.S. recession officially started in December of 2007. The National Bureau of Economic Research declared the committee determined that the decline in economic activity in 2008 met the standard for a recession. I'm glad they agreed. I guess it's not a recession unless they actually call it one. The $1.2 million drop in payroll employment so far this year was the biggest factor in determining that start of the contraction. A panicked Ben Bernanke cuts the Fed funds rate to zero, its lowest in history. This is from Bloomberg. The Federal Reserve opened a new era in U.S. monetary history, cutting interest rates to as low as zero and pledging to buy unlimited quantities of securities after conventional policies failed to arrest what may be the worst recession since World War II. Okay. Median home sale, this is December 23rd, 2008. Median home sale price fell 13.2%, the largest amount on record, to $181,300 from $208,000 a year ago. Biggest drop since the Great Depression. December 30th, 2008. Consumer confidence hits all-time low in December. The Conference Board Consumer Confidence Index fell to 38 in December from a revised 44.7 in November. 2009. It's a new year. January 2nd, 2009. U.S. manufacturing shrinks as orders hit 60-year low. Things haven't been this bad since 1948. Billionaire Warren Buffett's Berkshire Hathaway slumped 32% last year, the worst performance in more than 3 decades. January 8, 2009, Bank of England cuts interest rates to lowest since 1964. Yes, the lowest rate in 300 years since England's central bank was founded. January 9th, 2009, the U.S. highest job losses for years since World War II in the U.S. Battered by the worst housing market collapse in the country's history and by an ever deeper credit crunch, the U.S. economy shed 2.6 million jobs in 2008, the largest decline since the 2.75 million drop in 1945, when the dole queues were briefly swelled by servicemen being demobilized. January 16th, 2009, after filing for bankruptcy protection in November 2008, Circuit City throws in the towel today and announces it will liquidate all its remaining inventory and close its stores. 35,000 are to lose their jobs. 35,000 people lost their jobs. January 19th, 2009, The Royal Bank of Scotland announced the biggest loss in British corporate history today. The news triggered fears that the bank would be nationalized and caused a bloodbath in shares across the sector, overshadowing the government's latest financial bailout. Iceland sinks further into economic oblivion as the violent protesters are gassed by police. First time in 60 years. January 22, 2009. Toyota overtook General Motors in global vehicle sales for the first time, bringing to an end GM's 77-year run as the world's largest automaker. January 26, 2009. Bloody Monday. 71,400 job layoffs. Announced in U.S. 7 companies announced massive job cuts in a scary start to the week. January 27th, 2009. U.S. consumer confidence hits an all-time low. The Conference Board's Index of Consumer Confidence fell to 37.7, the lowest rating since records began in 1967. January 29th, 2009. U.S. unemployment checks set record. The Labor Department reported that the number of Americans continuing to claim unemployment insurance for the week ending January 17th was a seasonally adjusted 4.78 million, the highest on record, dating back to 1967. January 30th, 2009, the FDIC closes 3 more banks today, bringing the total to 31 since the start of the credit crisis. The failure of Utah's Magnet Bank was different. It became the first time in 5 years the FDIC was forced to directly refund depositors after being unable to find another institution willing to take over its operations. February 5th, 2009. The Credit Suisse posts the largest annual loss ever. February 13th, 2009. 4 U.S. banks are seized, bringing the total to the year to 13. Banks in Florida, Illinois, Nebraska, and Oregon were shut by regulators, boosting the toll of failed institutions to 13, as a worsening economy and slumping housing market pushes foreclosures to records. February 18, 2009, new home construction drops to record low. The Commerce Department reported that the construction of new homes dropped 16.8% last month and was the slowest pace on record, dating back half a century. February 20th, 2009, Dow Jones Industrial Average and the S&P 500 give back all gains for the past 11 years. 11 years of gains wiped out since 1997. This on top of the S&P 500's worst start to a year ever, down 17% so far in 2009. February 23, 2009, a total of 288 U.S. companies cut or suspended payouts last quarter, the most since Standard & Poor's records began 54 years ago, when Dwight D. Eisenhower was president. This is the fastest reduction in U.S. dividends since 1955. February 24, 2009, confidence among U.S. consumers plunged to a record low in February. The Conference Board's index declined more than forecast to 25 this month, the lowest since data began in 1967. This keeps happening. It just keeps going lower and lower. Bloomberg also reports that home prices in 20 U.S. cities declined 18.5% in December from a year earlier, the fastest drop on record. Foreclosures climb, sales sink. February 27, 2009, General Electric announces it will slash its quarterly dividend by 68%, beginning in the third quarter, as recently as January. GE CEO Jeffrey Immelt told CNBC that he had no plans to cut the dividend, which the company has paid for over 100 years. The last time GE decreased its dividend was 1938, during the Great Depression. March 2, 2009, the Dow Jones Industrial Average plunges below 7,000. As investors grow increasingly pessimistic about the health of banks and in turn the economy around the world, the Dow hadn't traded below 7,000 since October 28th of 1997, and last closed below that mark on May 2nd of that year. AIG posted the largest quarterly loss in history, $61.7 billion. AIG was once the world's largest insurer. It received a $150 billion bailout in 2008 and is about to receive another $30 billion from the government. With today's 4% drop in the Dow, we're going to go to March 5th, 2009. With today's 4% drop in the Dow, the current Dow correction already ranks as the second worst on record. Only the correction that began in 1929 was worse. March 6th, 2009. The U.S. jobless rate soars to 8.1%. 651,000 lose their jobs in February. Unemployment is at the highest level since 1983. 4.4 million jobs have been lost since the start of the recession in December of 2007. Half of those job losses have happened in the last 4 months. Unemployment, November of 2009, again, unemployment has officially reached 10.2%. The largest commercial lender, CIT, has claimed bankruptcy as of today, November 16th, 2009. 123 banks have been closed by the FDIC. The dollar plummeted below 75 today. The Bank of India purchased 200 tons of gold at an average price of $1,045 per ounce. Remember that, okay? The Bank of India purchased 200 tons of gold at $1,045 an ounce. That's the mark. I knew that day when that happened, 200 tons of gold was purchased by the Bank of India at $1,045 an ounce. You would not see gold below $1,000 an ounce again, most likely. It was set in stone. For a total of $7 billion, BlackRock, okay, keep going, keep going here, please stay with me. BlackRock announced today that the central banks are now becoming net buyers of gold, reversing a trend of 30 years. You see where this is going? Paper got wiped out, and boom, central banks switch gears. Reversing a trend of 30 years. With central banks selling gold, they were used to be selling it. Now they're buying it. Gold reaches a new record almost daily with today's $1,132 per decimal 60 cents an ounce. Gold continues to gain as the dollar weakens, reaching $1,150 an ounce. Man, I wish it was still there. I'd be buying it again. More so. Central Bank of Mauritius buys 2 tons of gold. So the little Bank of Mauritius, or Mauritius, however you pronounce that, they bought 2 tons of gold. Good for them. November 2009, according to the government, the broadest measure of unemployment, some 17.5% are either without a job entirely or underemployed. This is the so-called U6 number. Is at the highest rate since becoming an official labor statistic in 1994. November 23rd, 2009, the FDIC is flailing. When the Federal Deposit Insurance Corp acted recently to force banks to prepay their insurance fees through 2012, it effectively posted 2 warnings. One is simply that the FDIC is on the ropes. The other is the banking crisis is far from over. Strangely, the FDIC elected not to pursue its line of $500 billion in credit with the U.S. Treasury. Instead, it chose to zap healthy banks for $45 billion in additional insurance fees in advance, presumably to manage the takeovers of the sick ones today. Of course, as healthy banks are tapped for additional premiums in advance through 2012, they have less money to lend, which further exacerbates the credit crisis. In early morning trading, gold rises $25 to break the $1,170 mark. The FDIC closed the 124th bank of the year. November 24th, 2009, the FDIC insurance fund falls to negative $8.2 billion. The U.S. government insurance fund used to safeguard bank deposits dropped to a balance of a negative of $8.2 billion in the third quarter. First time since 1992 that it had a negative balance, the Federal Deposit Insurance Corp said on Tuesday. November 25th, 2009, Sri Lanka buys 10 metric tons of gold. The U.S. dollar plummeted to 74.3 today, and gold pushed past $1,192.